um it's always nice to have you back here on our channel, because what we do here is share values and teach you guys how you can really you know um trade the forex market. Okay guys, so today I'm coming here to show you guys how you can actually trade crash 300, because that's what we are trading at the moment. So I'm going to show you guys how you can actually catch spikes. Okay, so this is just strictly price action trading. We're not using any indicator for this. It's just price action and the market structure, how you can actually read the charts, because as a professional trader you really need to understand this. Not every time you have to use indicators. That time you just have to read the charts by yourself, really understand how the market works, because it will actually help you a lot. So that's why I always talk about price action. If you know you really want to be a professional trader, you have to understand price action and know how it works. So guys, I'm going to show you how to actually catch spikes. Okay, so now what you do, as the first thing you do when you open your chart like this, you have to come to an higher time frame, like the 1 hour time frame like we are now, to analyze the market and know how the market is faring at a particular time, if the market is actually on uptrend or downtrend. Because if you're actually expecting to catch spikes, the market actually has to be on a downtrend, because it's only when it's on downtrend that you have series of spikes, because it's the spikes that are actually pulling the market down. If there is no spike, the market will not go down. So when you see the market on a downtrend and on a serious downtrend like this, that's when you're having series of spikes, and it's very comfortable for you to start looking for selling opportunities. That's catching spikes. So now the first thing you want to do is, how do you know if the market is on a downtrend? You have to look at the structure and see which way the market is actually heading. So now you see that the market is on a downtrend. So how do you know this? How do you read this? So how you do this is, okay, when you see you know when you see series of the lower lows like this, as you can see from here, you keep seeing series of lower lows like this. So from the circles I'm drawing there, as you can see, it keeps coming down lower than the previous ones. As you can see, the first one here, is actually higher, and the second one here, it's lower than the previous one. And you see this one here is lower than the previous one, and you see this one here is lower than the previous one, and you see this one here lower than the previous one. So it keeps coming down like that. So you see the market keeps going up and coming down, going up and coming down. So you can see from the dots that I'm having there, that each of them goes lower than the previous one, each of them goes lower than the previous one, and each of them goes lower than the previous one. So now that can actually tell you that the market is on a serious downtrend, because it has series of the lower highs, and the lower highs. Okay, and you also have the lower lows. Down here is a lower low. Okay, here this is a lower low here, you have lower low here, you have a 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 lower low. It keeps going down, like as you can see, it keeps going down like that. So that tells you that the market is on a downtrend. So at this point, it's very okay for you to start looking for selling opportunities. And on crash, if you're actually selling, that means you're actually looking for spikes. So what you do is, after you might have seen the market on a downtrend like this, so what you do is you look for a perfect place you can open your position, and you start selling to catch those spikes. So what are those places? So this is how you do it, guys. This is how you do it. So we just got our spike, here, as you can see here, because we just got our spike. So I will show you that. I have to go to a lower time frame to show you that, but first I have to show you here something. So okay, So this is it, guys. As you can see, this is the trend line we had on the charts here. Okay, and from this trend line here, so you can see from the trend line we are having here, you can see the line is actually heading down this way. So this tells you also that this market is on a downtrend, because if you know how to draw a trend line and also know how to read the market structure, like I just showed you how you can actually point out the lower highs and the lower highs. So it's the trend line that can actually tells you too that the market is on a downtrend, because as you can see here, it keeps going down like this, and it tells you that the market is actually following this trend. So as you can see from here, the market came up here, it touches this line and came down, and it came up here again, touches this line, came down, came up here again, and it had a fake out here. This is what we call a fake out. Okay, what we call a fake out. So when it happens like this, when there's a fake out like this, you're actually expecting the market to come down, but you will actually have to know where the market can come down at that position. That's when the support and resistance comes in. You have to understand where you have your support and resistance. So this is our resistance here. And how do you know this is supposed to be a place of resistance? This is supposed to be a place of resistance because, as you can see, at this level here, you are seeing this line here, we have so many candlesticks. Okay, have so many candlesticks at this point, rallying around this point here. That means this is a resistance zone. It's a very strong zone that is very hard to break. Okay, so when the market keeps coming up to this level, it comes down, come up, comes down, come up, comes down. As you can see, the market couldn't break this place, so this is a resistance zone. It's a very strong zone. So that's when you drop your resistance line, knowing that when the market gets to this position, it will actually start selling again. So what you do is, if you have a fake out like this and this is your place of resistance, so what you do is you can actually open your position at the level. You start selling at this level here. So when you sell, this is where you will drop your SL, your stop loss, because this is where you're actually expecting the market to reverse from. Okay, to reverse from. So now if it doesn't reverse from this place and breaks this position here, that means the market might have changed direction, which is that it might start buying at that position. If it actually break this position, this strong zone here, it means the market, like the bullish intensity is very high, that it has broken this place. That means there might be a buy market at that position, and it might take some time before it starts selling again. So at that point, you have to put a stop loss here, so that if it actually breaks here, that means you are out of the trade and it wouldn't take so much money from you. So that is how we identify strong zones which are resistance. Okay, just by identifying so many candlesticks rolling around a particular place at a particular time. As you can see, you have so many candlesticks here rolling around here trying to break this place, but they keep coming down whenever they get here, keep coming down whenever they get here. So that means this place is a very strong zone, and it is our resistance, and where we can actually place our stop loss if we are to open a trade here and start selling at this point, because we are expecting the market to keep going down. So if it doesn't go our way, this will be our SL. So if there's a fake out like this, you actually have to drop your resistance line here, knowing that the market is actually going to reverse at this level. So if you see the market reversing at this level like it did, as you can see, there was a bullish candle here that causes this fake out. So when it got up here, it started going bearish again. So this is when you can actually place your trade, open your positions, take your candlesticks, and start making your money. Okay, so when it happens like that, if it's kind of a swing trade, if you open your positions here and you put your stop loss here, you can actually leave your trade to start running for a long time. But if you're actually scalping, you have to go back to the 1 minute time frame, pick your few candlesticks you want to pick, and you close the trade. But this is actually a swing trade. That's why I'm using a 1 hour time frame and all these trend lines, and showing you the lower highs and everything. So it's a swing trade which you can actually hold for some time and make as much money as you can. So now, since you've been able to identify that this market is on a downtrend, and at this point, this is where the market, the price is at the very moment. So now, what are we trying to do? We are trying to sell. So we are looking for a perfect place which we can actually place our trade, and and start making money. So first of all, the first thing we want to do is you place, the trend line you're seeing here. This is the trend line here. Sorry. This is our resistance line here. No, guys, this thing is not okay. This is our resistance line. Okay, it's a resistance line here. So the market, the price is at this level at the moment. So we are actually looking for where we can start selling. So where we are expecting this market to reverse back from, because this is our last lower high. So we are having another lower high here, which is lower than the previous one, because we're actually expecting this market to follow this trend line we have here. As you can see, the line is coming down. So actually expecting this market to follow this trend line here, which means if this market should break this line I'm putting here, is a resistance zone. So I'm expecting the market to either have a reversal from this place or here. Okay, so because I'm expecting it to follow the trend line just like it's doing here. So if it break this resistance line that we have here, as you can see, we just have a spike here because this is where we were expecting the market to reverse from. That's why we had this trend line here. If you go to 1 minute time frame now, you'll see that we just have a spike. Let me take you to a 1 minute time frame. As you see, we just had a spike, guys. We just had a spike. This is it, guys. We just had a spike. So as you can see, now the market is actually on a downtrend from the 1 minute time frame we are seeing here. The market is actually coming down from here. So we are still expecting more spike. So if you have to go back to a 1 hour time frame, like I said, this is where we actually expected the market to reverse from, because this is a resistance zone. So how do we know this is a resistance zone? As you can see, a candlestick here, came up to this level here, and it took us down here, okay, and it came back down here. As you can see, you have the candle that tried to break this resistance level, and it came down, it came up again, and it has been struggling for this at this very position for some time. So this is a resistance zone. Okay, so we are actually expecting the market to start selling at this point. So what you do is, when you see the price at this level like this, and having your trend line here, so what you do is, after placing your resistance line here, you actually open your positions. When you see the market like at this point that it was trying to break this resistance zone, you open your market, like you open your positions and start selling. Okay, you're expecting a spike from this level. So here will be your stop loss level. Okay, so this will be your stop loss level, because you believe that even if the market has to break this position here, okay, even has to break this resistance position here, it will not actually break this trend line here. Okay, so if it actually break the trend line, which we will have a fake out, we are expecting it to reverse back at this level. We are having this other resistance line here, because this is a strong zone again. Okay, how is it a strong zone? As you can count so many candlesticks at this point here, so many candlesticks that have been trying to break these positions, and it keep reversing at this point, keep going down when it comes up here. Some can't even get up here. So this very zone is a resistance zone, a very strong zone that we are going to have a reversal in the market. So now, since this is your resistance zone, okay, the first resistance zone, which can actually turn to a support if this candle breaks this position and comes up to this level. So this can actually turn to a support, while this will now be a resistance. So now we are actually expecting the market to start selling from here, which it is doing at the moment. As you can see, we had our trend line before now, and we were expecting a reversal at this level. As you can see, we've been having a reversal, and we are having a spike here. So if you had entered your trade from this position, you open your position here, you put your positions here and you start selling. So what you will do is you will drop your SL at this other resistance level, because if the market can actually break this resistance zone and this trend line here, it will actually drop and start following the trend. But if there seems to be a fake out here, because sometimes it happens like when you saw it here, there was a fake out here from the trend line, it was a fake out and actually it came down again. So you might actually have a fake out at this level. So that is why you have to know where to place your support and resistance. So this is our other resistance line, which we are expecting that if the market should break this other resistance and now came to our trend line and give us a fake out, so we are actually expecting it to have a reversal at this level. So we will actually drop our SL here. Okay, this is where we drop our SL, so that if the market didn't go away and it breaks out and maybe start having a bullish market, we won't have to lose much, okay, because we placed our trend line here, and this is where we're actually expecting it to reverse from. So it's always nice to know how to use your support and resistance. Okay, so that is it, guys. How is it, guys? It's very easy, guys, if you understand price action. That is why we keep talking about price action. It's what you really need to learn and understand as a professional trader. So like I always say, you can always hit me up. Check the description page, you see a link to my WhatsApp number. You can talk to me directly if you want to learn, if you want a mentorship, if you want someone who can mentor, mold you into becoming a professional trader, or if you want someone to manage your account, you've been struggling, losing money, and you want someone to manage your account and give you profit every single day, you can talk to me directly and we can deal together. And also check on the description page, you see a link to my free Telegram group, which we drop signals and also analysis like this, and showing you how the market is doing at a particular time, and every single day we keep doing that and dropping signals for you. And please don't forget to like this video, and don't forget to subscribe to the channel if you've not done that before. Subscribe to the channel, share the video with your friends, leave some sweet comments, and let's know how this helps you. So guys, as you can see, we are still having a spike. The market is still going down at the moment, and we are still expecting more spikes, more spikes, more spikes to come. As you can see, guys, we just have another spike. Just have another spike here. So guys, if you follow this no strategy and understand how it works, guy, I promise you, you're going to make a whole lot of money for yourself. As you can see, another spike just came, and we are expecting more spike, guys. Expecting more spike, guys. So all you just have to do is understand price action. I always preach this every single day. Understand price action. That is how you can actually milk this forex market. That's how you can actually make much money on forex, because it actually guides you, tells you how the market will actually do in a particular time and day. So as you can see from what we've been analyzing here, as you can see, it's working just like we said, that we are expecting price to start selling at this point. As you can see, it's been selling. We're having series of spikes, here it is. We're having series of spikes here, guys. It's been working, series of spikes here. So guys, if you don't understand price action, talk to us directly, guys, and we can teach you price action, because it's what you need in forex. That's what you need in forex. Price action is what you need. The moment you understand price action, guys, I promise you, you're going to make yourself so much money on forex. So guys, it's nice to have you guys watching this video, and I hope you really understand what I've been showing you. If you don't understand this, guys, talk to me. Let's join heads together and learn this thing together, and milk the market as much as we can. So guys, thanks for watching the video. Don't forget to subscribe to the channel, like the video, share with your friends, leave some sweet comments, and turn on your notification to always get amazing videos from us. Okay guys, thanks for watching the video. See you some other time. Bye.